Hi everyone, delonewolf here and welcome back to EVE Talk, your weekly look at the market in EVE Online. And as always, we'll start with some news, and there has been some development over the last week, so it's pretty cool. In game, of course, we have the 20 years of EVE Online that are coming front and center with a new event. We can in fact go to the agency, then in the encounters it is called the Capsuleer Day event, which runs for the whole month. You can choose between the Malakim Pirates or the Society of Conscious Thought, my choice of course. And then if you select this, let's go for a yes, you can run some sites and you can earn lots of skins, boosters, and at the end here a glamorous crate. I'm not really sure what's in there, but this is something that you can do for the entire month. Next up we have the Caldari that have finished their shipcaster, so that's pretty impressive. Of course, they are number one, obviously one of the most populous and active factions at this point, but they're ahead of the pack, so pretty nicely done. And then of course we have the announcement for the expansion Viridian that should be coming next month. In the month of June, definitely something that was on the roadmap, but very little information on that was released. And as far as I can tell from the announcement, we don't have the details. That will probably be coming into the next month as well. But it's going to focus on heraldry. That's definitely going to be a part of that. So I have been saving up my points and I've been diligently doing the daily mission in order to get those points from the Paragon station. And another part is more social options. So I think there might just be an overhaul of like the corporation structure and things like that on the books as well. I'm very curious to see what is going to be a part of that expansion. And then it was basically also announced that it's the first of 2 expansions this year. So we might be back on a cycle of 2 expansions a year for EVE Online, which could be pretty cool. Of course, I personally love that. It was part of my attraction to the game as well, that you got free expansions that tended to be pretty big, could change the game quite substantially and give you new goals, new sets of things to do. So really curious and hopeful for information on those expansions. So let's take a quick look at the new Eden store as well then, because there was a sale happening here, for Omega. So you have with the Avatar skin, Scorpion Navy issue skin, Megatron Navy issue skin. So you get a couple of options here with a 20% off from the normal price for some of these packages. So that's definitely a nice opportunity, especially for those that have plex, which should increase demand for plex a little bit. We'll take a quick look at the services. That is, we get 4 packs basically where you get 20% off to plex your accounts. So let's go into the market then, and let's get started with the pilot services coming in at 315. Like that, and let's go with plex first of all, of course. And if we start up with the chart, you can see while so far volumes have been pretty muted, we have clearly crossed another threshold. 5-day moving average moving up substantially, daily average is going up as well, and crossing the 4.5 million for the average price. Clearly a change in dynamic. You can also see the max prices and the minimum prices are going up substantially. So here we have a new Eden store sale driven increase in the price for plex. So far though, the market is handling this quite nicely. 4.7 million for the sellers and 4.5 million for the buyers. If we take a look outside of JITA, we can take a look at that. A little bit of competition now, trying to take advantage of these increasing prices, I think is a good method of trying to sell your plex, especially if you of course are selling at a profit at these prices. Just undercut them a little bit, and at the moment I think there's plenty of buyers out there that will want to grab them. And then for the buyer part of the market, those buy orders so far not following all that quickly, but they won't really have a choice. I think they'll follow suit very quickly. So plex prices going up. Quick look at the multiple pilot training certificate, volumes dying down, and this price actually going down a little bit at this point. But you can see, of course, we're talking of days where there are no trades, and here 6 units being sold, 2 units being sold. So it's very difficult to really say what's happening here. Of course, this is no longer a healthy market. You've got someone selling at 2.2 billion, then we go up to 2.3 billion, and buyers are at 1.9 billion. So that leaves a very big spread. And if someone were to sell a multiple pound trade certificate for 1.9 billion, that has a very big impact on the chart. That really starts to look like, daily averages all over the place. You can see here today's daily average is at 1.9. So far today, someone did dump a trading certificate to a buyer, but then yesterday and the price the day before that, it's at 2.3 billion. So that means that it's these buyers, these sellers, excuse me, that got more action, a little bit more action, of course, than the buyers, and that's how you get this weird starting chart ever since this has become a legacy item, which is pretty cool. We'll follow that for a little bit longer. Eventually, it will leave the section, of course. Next, we have the skill extractors with plex going up. We basically stem the bleeding. We have fully stabilized after a sale here as well. We're staying below the 500 million mark, so on average, we are going for 490 for the sellers, 450 million for the buyers, 40 million in spread between sellers and buyers. That's actually quite okay, 10%, which is also normal after a big sale like that. Huge volumes, lots of volumes coming into the market, lots of supply driving the price back down. You can see though that we went right down to a daily average that was the lowest price point at 430 million, and since then we have been edging up quite quickly, and over the last week basically stable just below the 500 million mark. Increased plex prices could put some upwards pressure on the skill extractors at this point here as well. So a full recovery, I think, will be on the books very quickly. Impact on the injectors. Here are the large scale injectors moving down just a little bit, but from a price point above 950 million a couple of weeks ago, basically the highest point of the year. This is just, I think, a little bit of market action around the edge, the highest edge, of course, for the price. So we're down just below 950 million for the sellers. Buyers are coming in at 900 million. That's another pretty much 40 million spread on something that's twice the price of the extractor. So that is a very narrow spread here between sellers and buyers. I don't think the small scale injector can do anything differently. No, just a couple of weeks here ago, again, middle of April, highest price point pretty much of the year at around 200 million ISK. And then we're starting to lose a little bit of ground on that, but it's very, very slow, very narrow. We're staying above the 190 for the average price, and so a couple of sellers coming in now here in the Tranquility Trading Tower. Someone even at 170 million. I'm not sure how you do that with buyers coming in at 178. You must not have set the distance right, but in JITA itself, it's a 191 million for the small scale injectors, and those are getting most of the action with the average prices staying above that 190. So still very expensive, but just coming down from that extremely high range. And then we have our daily alpha injectors that are staying within the 40 to 50 million price range, and in fact today's averages are a little bit lower than over the last couple of days. So the market is weathering the storm quite well. 49 million for the sellers, 45 million for the buyers, and one overshoot in a buy price at 44,930. So a little bit of dumping happening here apparently of some of these daily alpha injectors, which is a little bit weird because if you look at this chart, you can expect better sale prices later down the road. What could be happening here is turning some daily alpha injectors into ISK in order to grab plex deals, in order to buy plex and just take advantage of the plex. That would be something that I can see a very active alpha player that has actually made up extra daily alpha injectors, but also other players that have been speculating on the daily alpha injectors that are now saying, whoa, this is a plex deal I just can't pass up. Let's go for that omega status, and let's turn our daily alpha injectors into ISK and then into plex, which means a little bit of selling, putting some pressure on the price. That turns into ISK, which turns into buying of plex, which is of course increase in price now that they get 20% off for their subscription. And then finally we have the hypercores that follow the plex chart quite closely here, going back up in price a little bit as well. I think this could also be tied to just a little bit of action around 20 years of EVE Online, the Viridian expansion being announced. Overall, some signs that we may have some action coming before the summer. Summer slump does tend to be something that happens every single time, so it's going to be interesting. CCP is trying to keep us quite active, so we get a whole month of Capsuleer Day, then we get an expansion, Viridium, in June. It's going to be interesting to see how they can weather the storm in July, and then in August we've got the Alliance Tournament, and then in September we've got FanFest, which will then probably announce the next expansion for the end of the year. So overall, very busy, lots of action in this 20th year of EVE Online that we can potentially look at, and it's going to be interesting to see how the summer is going to turn out with all of that stuff that's basically on the horizon. Next up, we have the mineral market, and that is coming in at 10:30. And there we go, good news for Tritanium. You may already have spotted that on the ticker, but we got a little bit of a bump back above 4 ISK for the average price here on the chart, and we are at 411 for the sellers. Now it's 600 million units coming in, so that's a lot very quickly, but sellers are back above the 4 ISK mark, which is very nice, and then buyers are still at 385, trying to pull the price on average down quite substantially. A little bit more selling coming in at these better prices, but overall I'm pretty happy with that, and I would say I'd be back at a 50-50 when it comes to the Tritanium that I make. You're selling a decently good price above 4 ISK. 410, something like that, is not that bad. It's not great. Potentially you can get a better price for that, for instance on some nullsec action, or maybe an event or something like that that would require lots of minerals. But overall we're happy with it being back above 4 ISK, and so I'd feel pretty good going 50-50 on this one. Next year we've got Pyrite, very flat for the week. Can we defend 10 ISK for the sellers? Yep, 10.17 for them, 9.44 for the buyers. Honestly, pretty narrow spread here yet again. Decent volumes, but we're still above the 10 ISK, so same story here. I'd go 50-50. If you need ISK, if you have the means to hold off, I would not rush my supplies of Pyrite or Tritanium, but I definitely feel like this is a reasonable price for the efforts that we're putting in then for high-tech mining. And then we've got Mexalon. That is not good news, continuing the decline, and now we're getting closer and closer to 50 ISK for Mexalon, 53 for the sellers, just above 50 for the buyers. Here, honestly, looking at this 1 year chart, I would hold off on selling Mexalon, but it is still the most expensive high-sec mineral, of course, so I can understand people still willing to go for a 50-50 at 50 ISK for Mexalon. It is quite understandable, but it's pretty obvious here that we have too much supply for the current demand for Mexalon. So it makes the Tritanium bump all the more impressive. So very nice, I would say, for high-tech miners. We can go back to selling a little bit of it, but with Mexalon there is clearly too much sell pressure at the moment. Moving on to low sec, we've got the Isogen chart that is dipping just a little bit, but overall for the last couple of weeks pretty flat around the 600 ISK mark. 600 for the sellers, 580 for the buyers, and basically flat at the highest range of the year. So this is still very expensive, and I'm a little bit surprised that it's this anemic. It's just not moving at all from that 600 ISK price range. Sellers of course dictate the price, so we are basically stuck on this until something happens. Maybe we can get oversupplied, and again I would not be surprised if we do start to see those kinds of moves where it's actual market demand and market supply that takes over the action. We're no longer chewing through old reserves and steadily going up in price. No, we can also see dips in the price of Isogen, but we could still go a little bit higher, I think, for Isogen. Not by that much anymore, because we're at 600 for Isogen, and for Noxium we're basically reasonably flat at around 900 ISK here as well. 902 for the sellers and 890 for the buyers. That's a tiny little spread here between sellers and buyers, and so the low sec minerals are pretty stable at the moment. 600 for Isogen, 900 for Noxium. I think, you know, volume wise this makes a lot of sense to me. So we could be in a period where we start to see market action take over in these two minerals. And then of course we've got the cartels. Let's see what Zydrine is doing, jumping right back up. So nullsec is dictating the prices and is demanding way more for their minerals. 2,400 for the sellers, 2,200 for the buyers. So we're back to slightly above average, really pretty expensive Zydrine. But then Megasite, you may have spotted that on the ticker as well, of course, doing even better, jumping to 3,500 ISK, 1 year high point for Megasite, while HiSec is struggling so much they can demand that price. 3,580 for the sellers, 3,400 ISK for the buyers. Super expensive Nelsec minerals. It must be very much a difficulty for producers, for industrialists, especially in HiSec at the moment, because you've got this. You felt like for HiSec minerals you got a little bit of a breather, but low-sec is just super steady, pretty expensive. You know what to expect there, but then the null-sec minerals just become more and more expensive, and this is something that is definitely a little bit unique to them, because you have the largest, most organized groups that have these supplies in hand, and that does, in my opinion, give that opportunity for some cartel formation, for some real dictating of the price, and that's a big part of why they are this much more expensive and why they can increase in price very quickly, very violently, while all the others are struggling to find better prices. And then finally we've got Morphite that try to make it back to 40,000, but here very different. That's very interesting as well in a sense, because this also comes from Nelsec, but it is crashing right back down quite substantially. Today's average at around 38,000 ISK, just below 40,000 for the sellers, but 37.4 for the buyers. So here I'm getting the feeling that it is demand driven. Take two ships, there was a little bit of hype during the war, we got some price spikes, but everything there is stabilizing as well. And perhaps there is some expectation that Tech 3 may come back into the picture or something like that. Who knows? I do think CCP is planning some rebalancings as well, and I would not be surprised if tactical destroyers and Tech 3 cruisers might be on the menu, considering how badly especially those destroyers have done compared to Tech 2 ships value wise. That's an opinion, I don't have any actual information, but you can clearly see in my opinion here that Tech 2 demand is struggling a little bit, and we're stabilizing across the board for all of the advanced movements, Tech 2 ships as well. So seeing that pressure here is a sign that it's actually a demand problem. So Nelsec cannot just dictate any price for any of its minerals. Here in Morphite they're clearly struggling to maintain that 40,000 range. Next up we have the PI market, 1715. Let's take a look at these, and well, a little bit more demand for HiSec minerals, which might be Tech 1 related, which might be large ship related, so I don't think the pressure here is going to let up. Let's take a look at that. Here are the broadcast nodes, definitely down a little bit for the week, but basically 2.25 to 2.5 million as the new high range. We've been here for 3 months, so this is nothing out of the ordinary. 2.4 to 2.5 million for the sellers, 2.3 million for the buyers. Very expensive. Construction blocks back up a little bit for the week, and again pretty nice range above 11,000 ISK, or around 11,000 ISK for most of the last 2 months for this one. Almost 12k for the sellers, 11k for the buyers. Next up here is the coolant chart that is going ballistic all of a sudden, tied to fuels. Very good news for me. I've got one coolant producing planets. It's always been one of my favorites, but this is a real breakout. 17,000 ISK for the sellers. Supplies are just not enough. 14,400 for the desperate buyers. Something that is buildable on gas planets, very ubiquitous, just all over the place, very easy to make, is all of a sudden breaking out to 1 year high point. I think this also again showcases that we are seeing bottleneck action in PI. If you can jump to a 1 year high point basically 10 days ago above 12,500 ISK, and then a week later you can do so again up to 15,000 ISK, I think this is a sign that there is some supply side problems compared to the current needs in the game. It's just my read. I don't have all the details. CCP has those and they'll make the decision, but this is pretty unusual price activity in something that is that easy and that common as coolants from PI. Here is enriched uranium, just a steady drive up from 10,000 disk, which is actually already a reasonable price, up to 17,500 disk here over the last 3 months, currently going for 19,000, 17,000 for the buyers. So pretty expensive, and clearly again just continuously going up in price as supply is not meeting demand. Integrity response drones staying above 3 million, so that's its new range. Very expensive again in the last 2.5 months. And then here we got mechanical parts that in April managed to do another bump here to 15,000. This is another very common, very easy to produce PI refined material from barren planets. This gives back a little bit of ground, but definitely potentially here a new range again. We were at 10 to 12,500 disk, not super expensive, but definitely a great range for something that's that common. And I would not be surprised if here now we start to move in 12.5 to 15,000 disk. Sellers are at almost 14,000 disk, and it's especially the buyers, the desperate buyers, forced up to almost 13,000 disk for mechanical parts that are keeping us within those new higher ranges. Definitely the story at this point here. Miniature electronics made its way above 20,000 disk finally in March, so we gave a little bit of ground on that, but clearly again the 10,000, even 15,000 disk range is nowhere to be seen anymore. We are talking 19,500 for the sellers. Very, very expensive PI. Nano Factories losing a little bit over the week, but staying well above a million at 1.3 for the sellers and 1.25 million, 1.2 for most buyers, let's be honest here. So a little bit of a slowdown apparently in advanced PI materials, but nothing all too dramatic, and I would not be surprised if this didn't get spotted and that we have buyers coming in pretty quickly. Organic mortar applicators, one of those where perhaps that's exactly what's happening, as the average prices managed to get below 1.25 million for just a couple of days. Buyers spotting that coming in and pushing the price back to 1-year high point at 1.5 million for the sellers, 1.3 million for the buyers. So again, very expensive, and just a couple of days back below the new range, you could say, is enough to bring in the buyers, and there we go. Recursive computing module after a spike in March up to 4 million, and again higher volumes due to extra usage, 2.5 million to 2.3 million. I'd say rather expensive as well. Robotics easily holding on to a price range above 100,000 disks, so same story here, steadily going up for the year, almost making it to 100k, which was like the historical normal price, but eventually in the last couple of months, yeah, it's just unstoppable, impossible to maintain lower prices. 110,000, and that's where we're at for robotics. Our rocket fuels have been a little bit more all over the place, but again over the last couple of weeks building up again from at almost 15,000 disk for the sellers, 13,000 for the buyers. So again, starting at 10k, normal, very reasonable price for a refined PI material, making its way up to 12.5k, normal range. I would say historically speaking, I mean, we're coming from a couple of years where it was way lower than that. But then here, clearly again, January, March, things changed to 15k, managed to make our way back down as perhaps we went up a little bit too much too quickly, but we see a buy opportunity below 12.5, and again, we're right back on the upwards trajectory. Self-harmonizing power cores, trying to stay above 2.5 million, just below that now for the sellers, 2.3 million for the buyers. Again, a little bit of a drop off here in the buyers of advanced moon materials, but it's going to be interesting to see if this drop, just like with the organic mortar applicators, gets spotted by the markets and if buyers push the price back up or not. So next week could be quite telling. Here are our smart fab units. So this is something that to me is also pretty interesting. You can clearly see how the average prices here were not doing well. Same thing with the volumes, something that's not really in use, was struggling to keep pace with those more popular coolants, mechanical parts, etc., or robotics that are needed in fuels. And so we did manage to make our way to 100k for a little bit, but then we steadily lost ground. But because of the low volumes that it historically has, an increased volume need has a very, very massive impact on the price. And so we went from, let's take a look here, below 60,000 discs to 180,000 discs in just a couple of weeks. So that's pretty crazy, definitely a little bit too much as well, so some sellers are bringing the price back down, but the lower volumes mean a harder time selling and lower average prices, but far more volatility once the bottleneck becomes real. And I think that's exactly what's happening right here. 150,000 for the sellers now, 90,000 for the buyers, so they still have a little bit of hope. But if they break, if they become desperate enough and move to the highest ranges, well then of course we could potentially be looking at a completely new, very high range for smart fab units that materialized in just a couple of weeks, right? Just a month ago here in early April, it was like, all right, this is clearly not as popular. 65k, why would I produce this compared to robotics that's going for 100k, way more demand, far more stable? Well, this is the reason why perhaps it is not such a bad plan. Then we've got our sterile conduits that are staying above 125. Again, pretty uneventful week, I would say. Supercomputers very stable at a very high price range here as well, 140k, so quite a big price jump over the last year. Synthetic oil are one exception, I think. No, we're probably back above 10k for the sellers. Yep, 10,500 coming into play. It's definitely a demand thing, but volume-wise, on average, it's doing quite okay. Volumes are going up as well, so I'd not be surprised if here we start to go back up in price. Then we got our synthetic oil. Synthetic synapses, excuse me, just a couple days ago, 150k, 1 year high point, 134,000, very expensive. Again, look at this 1 year chart. Then we got our transcranial microcontroller, so more of this stuff tied to implants, giving back a little bit of ground after reaching a 1 year high point, at least on a 5-day moving average, and now landing on 110. But again, I feel like, although this one was early, and this was probably tied to an event here in September, jumping above the 100k and sometimes going below that, we might just again be in for a new range, a higher range for transcranial microcontrollers. Here are our water-cooled CPUs continuing to build here as well. You see first part of the chart, inconsistent volumes, lower volumes, so struggling to get a price above 5,000 disk. But now, the need is such that we move back above 10k, and now volumes are far more consistent, and we're at 13,400 for the sellers, almost 10,000 disk for the buyers. And our wetware mainframes are staying above 2.5 at 2.75 for the sellers, almost 2.5 million for the buyers. So a little bit of exhaustion, I think, in demand for advanced PI materials. But it could also be that this is not because there's less demand, but just because, well, the ISK is starting to dry up, going ever and ever higher price. It's been months now that everyone that wants to buy these materials, that wants to build those large chips, is in competition with one another to get more and more of them, and so perhaps some of them are falling out on some of these items, and so you get a couple. Well, buyers are still there though, so maybe yep. I'm not 100% sure. It does feel like some of them are moving back down a little bit. But it could be that it's not really demand that's dropping, but it's just the pockets are starting to empty out to keep competing and to keep pushing these prices higher. There's definitely, again, in my opinion, like here with coolants, some signs that we are talking bottlenecks in industry for PI materials. Next up, advanced MUMATs coming in at 2810. There we go. Let's start with the carbides as always. Yeah, up a little bit, but clearly 125, 150, pretty stable range, so nothing to write home about. 146 to 141 buyers forced up in this, so this is tied to Moon Mining, and that means that again Nasdaq does have potentially the cartel option, but there was just so much of it in the first half of the year that we lost so much value that CCP intervened in December here, decided to nerf the output of Moons by 25% to increase value, and all of that has basically been absorbed quite nicely by the market. So I think we're in a more stable situation. Here is titanium carbide. Well, we are seeing something quite different here, quite big volumes, big purchases driving the price up all of a sudden. 200 disk for the sellers, 220 for most, 174 for the buyers. So alright, titanium carbide jumping up could be tied to the faction warfare shipcaster event. Could also be tied to the new event, Capsuleer Day event, that maybe some Tech 2 or that some Caldari ships have the right resistances or something like that, because you may already have spotted that as well. Tengu doing a pretty massive jump too. So this is unusual, but it could be event driven in my opinion. Let's see what Minmatar is doing. Here is Fernite Carbide up a little bit, just above 125, but this is nothing all too special. You can still see that the tops are coming down, so I'm not saying this has increased volatility. And then we got Tungsten Carbide for Amar, basically matching the previous high point from about a month ago at 190. Definitely a little bit of sudden demand in these advanced moon materials. Interesting, but still nothing too dramatic, I don't think. Let's see what the metamaterials are doing for Galente. It's photonic metamaterials, 10 to 12, 5k. That's still well within the normal range. Bit of a bounce as we came down to 10,000 disc. For Caldari, it could be different then. Well, actually, definitely moving sideways on that new range at 15 to 17,500 disc. But still on the full 1 year chart, you basically have a second jump up with gains, and considering it's Caldari, I'm not all that surprised. Then we've got Minmatar with plasmonic metamaterials. These are landing on 11,000 discs, so that's not even a 25%, just a 10% gain compared to the lowest ranges that we've seen here, so nothing too special. And then terahertz metamaterials for Amar, stable at 15,000. There is really not that much to say. I'm not spotting any real volatility, except for, of course, Caldari Titanium Carbide breaking out to 1 year high point. But again, don't think it's market action. It could be due to the event. Let me know in the comments if that's correct, if the Caldari tend to have the right resistances or some advantage in the event. Let's keep going through the other list, but fermion condensate very flat for a couple of weeks here, so basically staying just below 50k. Next we've got Ferrogel, moved to 30,000 disc, but again 25 to 30 is probably its new range, the gains that have been made due to the nerf. Then we've got our Fulleриdes, very flat at 700, that's basically been its range since January. Hypersynaptic fibers dipped a little bit in the last month or so, last couple of weeks, just right back to 6,000 disc. Nano transistors, another one that does do a breakout and a 1 year high point. Are we still selling above 4,000 disc? No. So this does tend to happen here as well. Very quick recovery from this price spikes. We're back at 3,200, which is basically again the range of April. Then we've got phenolic composites. Pretty nice, 12.5 to 1500, that's the new range here. Pressurized oxidizers above 10k, as long as we're there I think it's okay. Reinforced carbon fiber, very clearly one of those that has immediately responded to the nerfs from CCP. So here you got announcements, etc. December the nerfs drops, we're back at 12.5 to 15,000 disc range, and we've been there since then. Quite normal, because this is a newer item, so it doesn't have as deep pockets or as many reserves as some of the others. And then ceramic fibers, another surprise breakout here, 600 disc, 550 at this point, so 1 year high point for these ceramic fibers. Next week could be interesting, but my expectation is that this will drop off very quickly and that the 300 to 400 range will be found once again. But a couple of exceptions, a couple of breakouts in the advanced moon materials. We'll have to see if any of these have legs. Perhaps I would say if any of them might, it would be tungsten carbide. If it is, again, demand driven, that there is a bit more of demand suddenly for Caldari Tech 2 ships, that could explain it, and that could have a little bit of a lasting effect. But for most of the others, I'm honestly expecting pretty sharp drop-offs like this one here in the nano transistors, back to 3,200. So you don't even see it on the chart, but we're again trading right down here rather than anything up the spike. So it's going to be interesting to see a couple of signs for volatility, mostly Caldari related. Let's see if it has an impact on the Tech 2 ships next at 33.55. There we go. Let's start with a couple Caldari ships, of course. Here is the Basilisk. Well, I'd say no. Weathering the storm quite nicely. 150 million as the new average range. 154 to 141. That's pretty much right on the middle of everything. Not the best place to sell, not the best place to buy. The Cerberus then slowly continuing its ascent. Really unusual. Usually in Tech 2 ships you get at least a little bit of action, a little bit of a rush on some of these, but no, for the Cerberus you can see also very steady volumes, and so over the last week we jump up a little bit, but it's nothing that we haven't seen before, as we went for instance above the 150 from below the 150, or just a week before that here. It's nothing too dramatic. 182 million for the sellers, 163 for the buyers. Obviously, over the last 6 months or so, that's a pretty nice profit margin, 130 to 180. It's not bad. We're also closing in on a 1-year high point, but this is not really the volatility that I was hoping for in Tech 2 ships. Next up here is the curse chart, and that was a little bit better, a sell opportunity at 250. But basically since then, again, we're moving into that new range, and that seems to be 180 to 200 million for the curse. We're at 200 million to 180 million for the buyers. Damnation plateauing now at 400 million, so that is basically your second sell opportunity if you haven't already. Command ships, I think it is normal that these become a little bit more expensive. Might also be tied to the event. I'm not really sure if command ships could take part in any of it, but they are of course Tech 2 battle cruisers, very powerful tanks, very nice ships. Volume wise though, doesn't show that that's what's happening. Then we get the Deacon, basically back above 20 million, not enough action. The Eagle slowly dropping back to 130, and you can see this does tend to be something that happens once we break on the minimum price here, the 130 million. You were basically in your buy opportunity, and then we do get that does get spotted so far very timidly. Couple of buying buyers here at around 20 ships, and we're pushing the price back up a little bit. We'll see in the upcoming weeks if this has any legs. 138 to 128, but again, if you're looking for volatility, that is clearly not it. Then we get the EOS, again command ship doing a lot better, back down to 390 from a high point here at 400 million a couple of days ago. But clearly here we have a little bit more volatility. So I'd say another sell opportunity. If you're still holding an EOS at around 250 or something like that, then you can definitely take your profits. Here is the Ares chart, double sell opportunity above 60. Basically now stable at 40 to 50 million again. Here is the Flycatcher slowly continuing the decline after its one sell opportunity above 60 million. We're back down below 50, yeah, 47.5 for the sellers, 44 million for the buyers. So even for this Caldari destroyer, which is very cool looking ship on top of that, very nice as well, shields, lots of missiles, so you can definitely do a lot with the Flycatcher. Nope, no action, just slowly coming back down, finding its new range, probably going to be below 50 million at this point. Then we get the Guardian, also coming down a little bit for the week, but yeah, 150 to 180 is what this logistics cruiser is going to go for. Here is the Heretic chart, one sell opportunity, and now again pretty stable over the last week at above 40 million basically on average. Next here is the Hound chart, very disappointing. I've been saying it for a couple of weeks, but I was hoping stealth bombers, which also even before we were starting to see some real sell opportunities due to the war, at least had some 15 to 25, 15 to 25. It had a little bit of volatility, but honestly, ever since the war here, very disappointing stealth bomber charts, just below 20 million, 18 million for the buyers. That's just nothing is happening here. Ichthyorsa continuing its slow increase in price. We're reaching 550 million for the sellers. So if you bought well below the 500 million mark, you do have a trade on your hand here. The Ishtar is back above 180, but that's just its new range, right? 160 probably to 185, maybe even a 160 to 190. This is it, but we're not increasing our volatility at all. Kirin slowly back below 20 million. Manticore staying above 20 million, but again, that's not really too good for traders. The Nemesis back above 20 million, but yeah, that's not trade action. 21 for the sellers here, but this is really very timid, very unusual. Such low volumes as well for the stealth bombers. Then here is the Nighthawk, 1 to 3rd step up, 1 year high points, definitely some volume. So the command ships are catching up, I think, to everything. 490 million, very expensive. Again, Caldari, it is noticeable though. Caldari, missiles, of course, and shields, so very powerful. It is a command ship, and yeah, here are these volumes. I think this could again be related to the event. Then we get the Oneros, 150 million on this one. Volumes are not great. Purifier, yeah, we got one sell opportunity here early March up to 30 million. Since then, basically stuck just above 20. The Rook coming back down, 150 to 200 million. That's the new range. Really disappointing. Saber, one nice sell opportunity, and actually very late buy opportunity up until February. Look at that, that was pretty damn nice. But since then we're stabilizing, and in fact we're going back below 40 million. 40 for the sellers, 37 for the buyers. I would say this is potentially, if you think that Nullsec could see some big battles again, interdictors is definitely a big part of that, and then they get destroyed, need to be replaced. This starts to look like a jumping point for the Saber. Next here is the Scalpel, definitely dropping off as well. Buyers down to 8.6 million. Potentially here, lowest price point for the entire year. If you want to jump in on a couple of Scalpels just to have them, and then to maybe be able to sell them at 20 million later down the line, that is a possibility. But again, we're back into think long term, try to buy low, and then you're dependent on outside factors like Nullsec or CCP to get your sell opportunity. Scimitar back below 150, so not much to say here. Sleipnir, yet another command ship, definitely the ship for the week here, back to the highest range, you could say. 350 for the sellers, 305 for the buyers. So let me know in the comments. Pretty noticeable that we get big volumes and higher prices for all of the command ships across the board. Is it tied to the event? That, I think, is my speculation, and then Caldari being the most popular one would also explain why there is an interest all of a sudden in its raw materials. Because you need quite a few for the command ship, of course. Here's the Vagabond, slowly moving back to the higher point or end of its range at the 150, 180, and then the Zarmast is actually coming back down after going above 500 million. But buyers not below 400 just yet, so we're at 488 to 406. Yeah, maybe you could try a buy order there, but I think you'd want to wait for buyers below 400 to do a jump in on the Zarmast. So yeah, take two ships, not that great command ships though, quite nice. If you still have some of those, you can sell for some nice profits. Next up we have the take 3 ships at 4250. And that could be interesting as well, of course. Let's get started with the destroyers. Here is the Confessor that jumped up to 90 million last week. It is coming back down, but not doing too much. 72 million for the sellers, 67 million for the buyers. Definitely still the highest price range for the year, considering that we're just coming down from that jump up to 90 million. So it's not even on big volumes. I'm really sure why we're moving up here to this new price range. Does someone know that I don't, that we're gonna change the ships or something? Because the Hecate is doing the same thing. Not even volumes or anything like that. 1 year high point, 65 million for the sellers, 60 million for the buyers. Definitely pretty unusual. And then the Jackdaw is trying to get back above 60 million for the week as well. 62 for the sellers and 54 for the buyers. I don't have an explanation. The volumes aren't really there. I don't know anything that would indicate there's changes here, but perhaps people know what I don't, because even this Vepel has now moved to 83 million for the sellers and 62 million for the buyers. So this would have been a trade, obviously, a month ago, buying them then at around 50 million here for the Jackdaw. Yeah, you'd have to be earlier here in February, but 50 million was possible. Hecate's at 50 million, definitely possible. And then Confessor as well here below 50 million. Then you're looking at some pretty nice profits, but I don't understand where this is coming from. I mean, a little bit of buying due to the war, I understand that, but you don't even see the volumes really on these charts here. In fact, volumes are declining on these higher prices, which is very unusual. So either it's just exhaustion that the supplies just aren't there, which, I mean, there's not that much supply of these ships here. So that's it as well for the Jackdaw. So it could be that, but here at the tail end, it starts to feel like maybe speculation, maybe manipulation. I'm not really sure, but this is very unusual. But I would still hold that potentially, if there's going to be buffs in ships, it would be Tech 3, especially Tech 3 destroyers, because I think that their value proposition has been really bad compared to Tech 2 ships that went down in price so much. And you can see how Take 2 ships have become more expensive, but so have our tactical destroyers, because they require all of that gas as well, just like the faction warfare ships, where there's a lot of action. So that may be it, right? Real exhaustion in industry, because, well, faction warfare is taking up that many more resources. So I would not be surprised if something happens here in this market as well. But then we get the cruisers. So the Legion, all right, big volumes, but not moving in price really. That's a bit of a surprise. 204 million for the sellers, 190 for the buyers. In fact, minimum price is going up. Everything is coming together nicely at the 200 million range. More volumes though, I think, due to the event. Tech 3 cruisers are always pretty popular. More volumes as well here since the start of May. Same story, and here we do have a price response. So just a couple of weeks ago, probably able to buy at 185 or something like that, or below the 190. Currently Lokis are selling at 240 million, so a little bit of a trade that was possible here. Rather timid response so far. Then we get the Proteus, slightly higher volume, slightly higher price, but clearly not the most popular Tech 3 cruiser here. 203 to 185, still a decent spread as well. But then we have our Tengu, of course, far more popular for the event. Obviously, again, in May, volumes double pretty much, and then we were at 190 for the price, and now we are up to 215 to 20 million for most sellers. So definitely a small trade that was possible in just 10 days for the Tengu here, which is tied to the event, of course. And I think, again, Caldari missiles, shields could just be their setup. It could also be the resistance profile or something like that, but for some reason the Tengu far more popular than the other Tech 3 cruisers, and that is bound to be due to the event. I think same story with the command ships and things like that. Next up, we still have the extra product for the week, so I'm gonna take another look at mining ships coming in at 46.55. Let's see what those are doing, because we got both Tech 1 and Tech 2. That could be interesting, including going pretty big potentially in like the Orca. So let's get started with the mining barges. And I think the barges are Tech 1. So here is the Coveter. Yeah, pretty interesting. You can see price going up to 62.5 million. Definitely the highest range here as well. This despite the fact that our high-sec minerals are going down in price. Not for the week, but in general we get a little bit of pressure here. Those null-sec minerals are really hurting and are making Tech 1 ships quite expensive. Here we've got the Procurer, pretty bad chart, but if we try to get something to show here, clearly we're below 60 million, but we're pretty expensive at 57.5 on the full chart. And then the Retriever finally, I think the solo version also just slowly climbing over the last couple of months, back above 60 million as well. 61 million for the sellers. Very, very expensive Tech 1 mining barges at the moment. A big part of that, again, in my opinion, is those null-sec minerals. Moving on to the Tech 2 versions, then here is the Hulk chart. That's actually staying pretty expensive as well at 250 million ISK. So I thought we'd see a little bit more of a pullback here, but still quite expensive. Then we've got the Mackinac, also 250 million, basically quite expensive as well on the 1 year chart. And then finally the skiff that just in the last couple of weeks had a dip here in April, went down to 150, but is back above 200 million. So clearly again still very expensive. So I'm honestly a little bit surprised, because that makes me feel like there's a lot of need for mining ships. Everyone wants to see mining ships and is desperate for them. It could be that in nullsec there's actually a bit of hunting happening, fleets getting caught and getting destroyed, needing to be replaced, and that all of that is having some impact on their prices, but also on the demand for ships, because I thought Tech 2 ships would be lower in price. They would have stabilized at a price a little bit lower, but they're actually all very, very expensive at the moment. And then of course, if we look for confirmation for the expensive Tech 1 capital ship stuff, I think if we go for the Orca chart, yeah, exactly 2 billion ISK with very interestingly though a little bit of a pullback right at the tail end here. So that could be that cresting of demand in advanced PI as well. We're still at 2 billion to 1.9 billion, so obviously a very expensive Orca at the moment. But perhaps again a couple of signs here of exhaustion in the capital ship production market, where they've been competing for materials for that long, pushing the prices up, making them very expensive as well, of course. But perhaps there is a bit of exhaustion to be spotted here as well in the Orca chart. And then we can take a quick look at the Rorcal, but that usually here in JITA doesn't tell us all that much, although we are in range from a low sec system, I think. But yeah, this is like nothing available. Oh, we'll take a look around. Can do that. So 10 jumps out, you get low sec 4.8 billion for the sellers and 4 billion coming in for the buyers. So this is obviously a very, very expensive Tech 2 ship, the end of the line, but it is also now a command ship. And despite the fact that its output was nerfed drastically, it is still quite expensive to go for a Rorcal. That I think, if you look at the industry of this, needs, yeah, a whole bunch of stuff that becomes extremely complex. So probably one of the most complex things to make, which it might just lose that title, because I forgot about that. But if I'm not mistaken, in the video from JITA 4.4 from CCP itself, they mentioned Tech 2 capital ships as well, which could be very, very interesting for the Viridian expansion. But that could be another step up outside of like Titans and structures, of course. But this is like the most complex Tech 2 ship that you can make at the moment. But that could come to an end if we start to see Tech 2. Who knows, Titans, it could be very, very interesting overall. So yeah, I would say a pretty interesting time to be playing EVE Online. If you have Plex or the means to get Plex, you can also get Omega for quite a long periods of time at a nice discount. And lots of stuff on the horizon. So there you go, we'll keep going. Thank you very much for watching, guys. And as always, I'll see you next time.